Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Thank you, Jeremy, and thanks for our listeners jumping on another call. We saw the U.S. Indices fall due to some policy uncertainty, some tech stocks sell-off, and some consumption slowdown concerns. So we saw the Nasdaq down about 6%. We saw the S&P 500 fall about 1%, and the Russell 2000 small cap down about 1.5%. Now, earnings-wise, a big one out there was Nvidia. They came out with the earnings. They didn't necessarily ease concerns on spending fears or investment fears with AI. So that's kind of led to an additional sell-off in the semiconductor sub-index. That was off about 7%. Cryptocurrency continued its slide. Bitcoin was down about 11%, following a theft of some coin over in North Korea, or some North Korean hackers in their theft of some Bitcoin. If we look at commodities, crude oil fell slightly, with gold dropping about 3%, and that might have just been good old-fashioned profit taking. Now, tariffs are the talk of the tape. Not just last week, they're going to be this week. The White House did confirm that the tariffs on Canada and Mexico are starting back on March 4th. If we look at bonds, U.S. Treasury yields did continue their slide. So we saw that yield coming back, maybe some growth concerns on that 10-year bond, falling to about 4.23%, ending the week last week. Consumer confidence, that dropped to about 98.3 in February. Now, that was the largest monthly drop in nearly 4 years. Unemployment rate, claims did rise a bit, up about 242,000, with some continuing claims near some 3-year highs. Housing market struggled. New and existing homes continued in terms of sales dropping. Continuing to see high mortgage rates, and at the same time, some higher prices for homes that are out there, because we just don't have that inventory opened up. New can't build quick enough, and existing homes, you know, that market hasn't really increased in terms of availability. Now, internationally, we did see Germany's some mild economic improvement. Japan's inflation was above target. And then Canada's Q4 GDP did beat forecast of about 2.6%. Now, this week, it's probably going to be about tariffs and growth fears, the economy, what all this is going to, what role is that going to play in terms of tariffs with all the latter. But we'll be looking at some economic data. We'll be looking at sentiment survey. We'll be looking at U.S. Treasury yields, what they're suggesting in terms of economic slowdown or growth or whatnot. We'll be looking at the Q1 GDP estimates. They're expected to be around 2.3%, and that would be pretty similar to what we wrapped up the year with in Q4 of last year. We'll be looking at consumer spending, and has that held up? We'll look also looking at some upcoming data in terms of February U.S. employment report, the ISM manufacturing, some PMI numbers. Earnings, we're not done with them yet. So we still have some big ones coming out. CloudStrike, Broadcom in the chip area, Target and Costco, maybe giving us some hints and clues on consumer spending and if that's holding up. And then we'll kind of wrap some things up with international. We're looking at the European Central Bank and their expected rate cuts in terms of interest rates, and then Europe's inflation data. And then we'll be looking at some PMI numbers coming out of China. Jeremy?
Well, thank you, Graham. I had a question for you. We've been getting some volatility here in the markets. Is that something you expected or something you continue to see going forward?
Absolutely. It's expected it. Don't always love it, right? We want everything just to go straight up, but sometimes that's not healthy. So we are not surprised to see the leaders of 2023, 24, and a couple of those sectors like AI, tech, information technology, consumer discretion kind of give up a bit, be the big underperformers as we started the year, where the underperformers of the previous 2 years really become the outperformers, and say some healthcare or utilities, even bonds. We've been seeing those yields coming down as a safe haven, if you might. As this tariff talk and the potential ramifications of that being with growth in the United States or a tax on the consumer kind of works itself out through talk, if you might, if not action. I think the market just has to find a level of comfort, and that's not always comfortable to experience. I completely understand that. So I would just ask for patience. We're going to get some volatility here if we work through the talk, through tariffs, as we see what effects it may or may not have on the economy. Some of these things are a lot of talk without a lot of follow through. Some are going to be talk with some follow through. We'll just have to weigh all that out. But expected volatility, completely expected. We'll just have to manage through it for the next couple weeks, next couple months.
Gotcha. Well, Graham, we always appreciate the information and expertise. And thank you to our listeners. We do have our retirement planning today classes starting this week. We got one starting tonight. And then we have our next one is on this Saturday coming up. There is space available for that class. So if you do want to attend that, just give us a call here at the office, or you can go on our website and register for it there. And if not, we'll look forward to seeing you next week.
Take care.